for you to grow your wealth. Hey, I'm your host, Brett Swarts. In each episode, I am joined by some of the best entrepreneurs, real estate minds, financial and wealth advisors in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. Hey, I'm excited about our next guest. He is an entrepreneur who's on a mission to buy more businesses, maybe your business. He's underwriting deals all the time, and he has a background of actually owning and selling a couple companies, which we're going to touch on here. And then he started a podcast called Let's Buy a Business. And he also has a website, letsbuyabusiness.com. Please welcome to the show, Ryan Condie. Hey, Ryan, how you doing?
Great. Thanks, Brett. Thanks for having me.
Hey, excited to dive in to your story. And so would you give our listeners a little bit about your background and your current focus?
Yeah, absolutely. So I spent about 8 years in software sales. And then I got into more e-commerce, the e-commerce game. So I've bought and sold several different businesses in the e-commerce space. I've started businesses from scratch. I even started a candy factory about 6 years ago from scratch, which you can find in Sam's Club and Walgreens now. And I realized my background was more on the sales and marketing side, not the manufacturing. And I realized I had a lot more fun with the businesses that I had bought. So I could skip the first 5 years of the grind and already developed that product market fit. And so I've made a couple acquisitions up to this point. I sold one of my e-commerce companies in January, started documenting my journey of looking for a new company, Brett, and we're just about to close on that company in about 2 weeks and can kind of share more details as that launches, but it's been a fun process. I'm kind of all things acquisitions. I think a lot of people can go down this path and they don't need to come up with the next Google. They don't need to eat ramen for the next 5 years as they start a company, but they can find something that's already working. It's got customers, a product market fit, and of course, profit. So
absolutely love that. We're going to dive into that full part of the strategy and understand how you create and preserve more wealth, doing exactly that, and saving a lot of time, which sounds really where we're about right now in this age of attention versus the age of information. But before we go there, the big question that a lot of our listeners who tune in want to know is, Ryan, what's the biggest frustration you had when you sold those companies as it pertains to capital gains tax deferral?
Oh man, I should have called you before I sold, right? So I've done this a few different times, and every time I learn new things, right? I didn't go to school to become a CPA and understand all the tax laws, and I would say most entrepreneurs don't. But you really need to start preparing for these things, say 12 months in advance. And those are the steps I should have done, as I should have hit up my CPA, way before, a year before I decided to sell, because I knew I was getting close. And I said, you know what, I'm getting kind of sick of this business. I'm ready for the next thing. And I knew that about a year in advance. And so I did some prep within the business, but I should have prepared and talked with my CPA a lot sooner, because there could have been things we could have done and structured it different ways. And knowing what I know now, and whether you do a stock sale or an asset sale, completely changes the game. And I had the opportunity to do a stock sale, and I actually said no and wanted to do an asset sale for some other reasons. And ultimately, it was a big tax hit that has been interesting to kind of live through. So if you're having any of those life decisions, talk to your CPA sooner rather than later. And everybody tries to save money in certain areas. Saving money in your CPA is not where you're trying to save money. Definitely go with someone who's worth their weight, because it's going to save you much headache down the road and save you a lot of money.
Yeah, really well said. And for anyone who's listening right now who's considering selling a business, real estate, primary home, or public or private stock, you go to capitalgainstaxsolutions.com and you can learn about the Deferred Sales Trust. In fact, we just did a business sale, a $2.6 million sale for a gentleman out of Alabama. He was selling a business and he wanted to transition into real estate. He deferred $600,000 of capital gains tax using the Deferred Sales Trust. And what's cool now, he's launched his next venture, which is developing multifamily real estate. It's kind of a syndication group and with a friend of his. And they're using the funds that they would have paid to the U.S. government to fund the next business venture. We call it the go fund yourself, right? Instead of going for VC capital or having to go to a bank, right, and pay points and pay for the loan, why not just fund yourself through your own deferred sales trust, which is what we can do now. But that being said, Ryan, this is our shorter.
Also,
yeah, go ahead.
Brad, let me jump in right there. What's really interesting is people hear like, oh, you sold your business for $2.5 million. That was before the tax man came in. So the fact that you're able to structure that is really, really incredible, and it helps from the planning beforehand, because I can't tell you, and I've lived it, I can't tell you how many owners that I see, they sell a business and they cut this check that is enormous to the tax man, and they're just not necessarily big things, but little things you can do to kind of prepare yourself beforehand. And, you're talking $600,000 that this person could save. That's a pretty massive amount to start their next gig.
Oh, it's transformational is what we say, right? It's not only just a transaction, but what that can do for a family. And he's relocating his family. That extra 600,000 means the world to him. It gives him that extra margin. He doesn't have to be so aggressive in his investments. He can be more conservative. He also, this is the other thing that people don't catch. He doesn't have to take all that 2.6 million in the 1 year. So he had already had a high income. Then he's adding the 2.6 on top of that, and he's getting just completely clobbered. So in other words, he can defer all that. His income still stays at a relatively number here, and now he can slowly receive payments, and that's the idea of this installment sale known as a deferred sales trust. We're also doing an e-commerce sale right now. We'll see if it goes, but it's a gentleman 8 years ago, and this will maybe connect with you. And he goes, I'm selling my stuff on Amazon, and all of a sudden I got all of these Me Too copycats from overseas, and my margins dropped. So then I had to pivot and regroup and start my own brand. And then I built that brand. I go, what are you mainly selling? And he's down in Southern California, and he's originally from Chicago. He goes, well, I'm selling a lot of curtains for bathrooms. I'm like, okay. And I go, but it's exploded. We've kind of had our niche here. We sell some other stuff too. And I go, what do you think it's worth? And he goes, probably about 40 million. I'm like, I'm like, what's your basis? He goes, oh, about zero. I go, what do you owe? About 500,000. And he's our age, Ryan. And I go, what's your tax liability? He goes, well, I talked to my CPA. He thinks it's about $16 million. And I said, okay. And he goes, well, I heard you on a couple podcasts, and I'd like to learn more about this. So the point of all of this is not only is he getting a chance to sell, he had next to zero 8 years ago. Now it's 40 million. He's going to defer 16 million of tax. And then he has the ability to roll that into more of his own businesses and also invest into real estate, which is pretty amazing. We call it transformational. So again, you can go to capitalgainstaxsolutions.com. Hey, Ryan, for those who want to learn more about you right now, this is our short interview before we dive into the full interview. If they want to connect with you right now, what's the best place for them to find you?
Probably the best place is LinkedIn. So Ryan Condie, Condie. I'm pretty active on LinkedIn, or you can just go to letsbuybusiness.com. I have a podcast of the same name. You can kind of follow our journey. Once we make this acquisition, we're going to open up everything, and we're going to run this company openly, publicly. So we're going to say, hey, this is what we acquired this company. These are the changes that we're making. And then each week we'll say, hey, these are the different levers. This had an impact. This didn't. And just kind of teach people throughout the way. I think a lot of times people work too much in a silo, and people don't really know what's happening out there. But we've tried to approach this whole process, and we're approaching growing this business completely open so people can watch us do it.
I absolutely love that. What a unique concept, and what a great way for people to learn hands-on by tuning in and following your journey along the way, right? And documenting as you go for those challenges and how you overcome those. And fantastic. So check out Ryan. And again, if you're interested in deferring some capital gains tax, go to capitalgainstaxsolutions.com or go to experttaxsecrets.com if you're a business professional looking to grow your business with the deferred sales trust. With that, look for the full episode to drop